Now, I know why you clicked on this video. I know why you're here. Your trading is struggling in some way and you want to fix it. You're lacking consistency. You can't take it to the next level. Well, I've got good news. You're in the right place. Because in today's video, we're going to talk about the process behind successful trading. We're going to break down that process into a 5-step blueprint, 5-step roadmap, whatever you want to call it, that you can then take and implement this process into your own trading every single day. So if you're ready to break this down with me, if you're ready to make your process better every single day, this is going to be something you start today and every day you're going to get better with it, then all you need to do is sit tight, shut your phone off, close Facebook, and hit the red button below me, join the family, subscribe, that way you don't miss any of our future trading content. Now let's get into the video. What's up, traders? My name is Austin Silver. I appreciate you being here. I appreciate you checking out the channel. If you're new, like I said, hit the red subscribe button below me, join the team, that way you don't miss any of the future trading content that I'm constantly creating for you and the rest of the trading community. Today's video is going to be all about your trading process and how we can make that more in line with how professionals trade and what their process is. But before we can get you to that point, we have to come to an agreement. We must agree that you have to change. You must be okay with swallowing your ego and putting your pride aside, accepting facts that you thought maybe were not true in the past but now are proving to be true, because that everyday practice of change is what's going to get you into the place that you want to be. It's going to get your trading process to the place that you want it to be. So here, looking at me right now, accept the fact that change is necessary here and accept the fact that it's not going to change overnight. It is an everyday practice that must be done over and over and over again until it's finally implementable, like it's the back of your hand, basically. Okay? So if we agree on the change, if we agree that you need to change and you're going to implement this process for the better, now we can keep watching. The way that I want to relate this video to all of us to try to make sense of it outside of trading is to something called the scientific method. If you were in elementary school here in the United States, you probably learned this. It's observation, hypothesis, experimentation, data analysis, and then conclusion. Those are the 5 steps that what we would think all scientists, all mathematicians, people that are trying to prove a theory would follow to then prove that theory correct or false. This is their process, and you can see it even says here, ask a question, do background research, conduct the hypothesis, then test it, then analyze, and then report it, and then repeat. And that's their process, right? So this is the scientific method that we were all taught in grade school. This is the method that they use to, prove theories in physics or prove something with biology or whatever it is, where mutations come from or genetics and all that stuff. Compare this to our trading process. I've got your 5 steps right here. The first step is idea generation. The second step is to translate those ideas into good risk-reward opportunities. The third step is to apply proper risk management, proper position sizing to the opportunity that you're questioning. The fourth step, after the trade is finished, is review the trade and analyze it against the rules that are in your plan. And then, of course, the final step is to cap the trade, close the book, move on, and start looking for the next opportunity. So we're going to break down each step of the 5 in detail now. First, idea generation. This is when you're looking for potential trades that fit your rules, that fit your system. Whether you're trading Forex, whether you're trading stocks, whether you're trading options, you're looking through the market to see where is a setup that fits your repeatable process, your repeatable patterns that are proven to work. The thing about a trading process, all of these 5 steps, is that they have to be implemented behind a profitable plan, behind a proven system. The process is your actions within the trading plan. I'll say that again, it's important. The process, what we're talking about here, these 5 steps, are your actions within the trading plan. Your plan is separate from your process. Your plan has to detail your entries, your exits, your stops, your risk management, all of that stuff. So what I'm saying here for the idea generation is you want to be able to take all your rules, take all of your parameters, your checklist, and analyze it against all the tradable assets that you have at your disposal. Whether you're trading all markets or one market, you want to look at everything and find the best potential setup. You then want to build an if-then statement around that idea. And sometimes, like I say at the bottom here, no ideas are better than bad ideas. So you want to be able to differentiate, this is an A setup, this is a B setup, this is a C setup, and then going in and saying, if this happens, then I will react in this way. That's my trade. Building those solid if-then statements prevents you from being emotional. It prevents it from being a gamble of a trade. You generate an idea, if this price comes to this level, then it should do this, and I will act in this way. There is your idea. It's now generated. Take that to the next step. which is idea translation. Now we have the potential idea. We know a pair, or in our case for currencies, we know a pair that looks good, maybe a trending pair, things are starting to line up. You then want to take that idea and read the chart to measure the potential risk versus reward. Risk should always be measured first. I can't stress that enough. And you want to almost try to find a reason to not take the trade. If you get caught up looking at the potential reward first and not looking at the risk, you're going to be emotional and probably act against the plan, against the process in that situation. The best thing to do is always, I can't stress this enough, guys, always measure your risk first. And then what I would do with my process is I would then look at the reward and see if that reward is attainable according to the checklist, according to the parameters that I use in the system. A quick example of that would be if I have a setup that I'm risking 15 pips, but average daily range of this pair tells me that we can only go another 5 because we're almost maxed out. It's traveled what it normally does in an average day. I might not take that setup because if it's an average day, which you want to assume that it is, you might not get that push that would even make it a great trade at 1-to-1. You're not going to get 2-to-1 on that. So you want to make sure you're measuring risk reward, but you're using the parameters of your system to tell you where the potential reward actually is. You follow me there? Next, the third step, we now have our idea. We've translated it into a risk reward opportunity. Now we're ready to act. So what I recommend is that you use your risk profile. Now, I talked about this in our webinar a few months ago. All of our members of our VIP chat have the replay of that. The risk profile is very important because what that does is it says, look, here are the setups that I like to trade. Here's the risk percentages that I like to risk. And here's how I'm going to grade those setups with my checklists. Because once you can grade a setup, for example, if I have a breakout for a new high of day and it's an A setup, then I know there's in my trading plan a designated risk percentage for breakouts for new high of day A setups. If it's a breakout for a new high of day, but some of the checklist isn't right, I would give it maybe a B setup, or maybe there's not a lot of space on average daily range yet. I'll give it a C setup, and I won't hit that trade as heavy with as much size as I would hit the A trade. So you want to keep that in mind, and I always have to tie this in, which is to turn off the money switch and turn on your percent switch. I'm going to have a video going up hopefully in the next few weeks talking about this. If it's already up, I'll link it right here. What I basically am going to emphasize here is that most of us as human beings are conditioned, because our entire world basically revolves around money. Most of us are conditioned to have the money switch over here turned on and the percent switch over here turned off. What I say you need to do as a trader, as a profitable trader, you need to switch it. The money switch needs to go off and the percent switch needs to go on. You need to stop thinking in terms of dollars and cents and start thinking in terms of percentages, because those percentages are relative to the amount of money you're trading. And you guys have all heard the saying, if you can't manage 1,000, how are you going to manage 1,000,000? It's so true. And just in the same sense, if you're, not satisfied with 10% of 1,000, then how are you going to say you're going to be satisfied with 10% of 1,000,000? Well, only if you're looking at the dollars. I'm looking at the percents. That's what real traders are focused on. So when we talk about this third step of the trading process, it's grading your setups, having risk percentages, risk management systems built behind those setups beforehand. So if you see it coming and you build the if-then statement, you look at the plan tells you what percentage to put on that setup. No thought should be required other than where's my trading plan for me to look at it, right? Once you get to that point, again, it's just shut off the money switch, turn on the percent switch, and let the trade do what it's meant to do. Almost to the point where you want to set and forget it. So we move now into the fourth step of this trading scientific method, of the trading process. And like I say here, once the risk is set, you want to almost forget it. Leave it alone. Let the trade play out, because you should have had a good if-then statement. You should not be too heavy, too large in the position to where you're sweating it and you got to stare at it because the money's so bad, right? So in this position here at trade review, the trade's already going. It's already off on its own. You've kind of submitted the data almost, if you're comparing this again to the scientific method. You want to take the trade, let it be what it's going to be. Because if you did the right analysis, if you're using a profitable system, if you're following the rules correctly, more often than not, that trade should pay you and you should win and become consistent. The problem is that you sway from that, and that's where the consistency kind of falls off into a ditch. So the best thing you can do in step 4 of the trading process, let the trade play out, set and forget it, but be ready to come back and journal it. Analyze the trade and analyze not only the technical side of it, but also the fundamental side of it, and also your physical and emotional state during your trading. I think that is very important when you talk about self-analysis with your trades. And it's important, and I talk about it here when we say move on to the next trade as the final step. It's important to not really whitewash mistakes as far as like overlook them, but you don't want to be overly negative in your self-talk. I hear it all the time where people will say, how could you talk so negatively to yourself? Because you would never speak that way to other people. And it's so true. So when you take a bad trade, you don't want to journal like, oh, you stupid effing idiot, like I'm an idiot, blah, blah, blah. Don't talk to yourself like that, because you wouldn't talk to me like that. You wouldn't talk to your mom like that. You wouldn't talk to your neighbor like that. So you should talk to yourself in your journal, in your analysis, as if you were being as unbiased as possible, sitting right in the middle. What did you do good? What did you do wrong? And how do you get better from this one piece of data, from this one trade? It's kind of similar to the analogy that I draw to fairly often when I talk about the process of trading, which is that it's a marathon, not a sprint. Think about every trade you take as another step in your marathon, and think about how many steps, literally how many steps are in a marathon. Hundreds of thousands, right? If not millions. So each step is a trade for you. Somewhat insignificant, but over the long term builds you up to a great goal. And if you stay focused on that, it's very easy to implement this 5-step process. So again, to just kind of recap it, the first thing you do is you generate the ideas. You come up with an analysis through looking through your tradable assets. You figure out what is the best potential setup for the day. Then you take that analysis and translate it into a good risk reward opportunity. From there, apply proper position size, apply proper accounts management, meaning you don't risk too much of your account on any one trade, and take the trade. Let it roll, right? Step 4, after you've submitted the data, after you've taken the trade, you see whether it's a winner or a loser. You review the trade, analyze it, and compare it to the rules in your plan. Did you follow all the rules correctly? That's very, very important. And then of course, the 5th step, self-analysis, full trade recap, close the book, and move on to the next trade. That's a big piece for me. A lot of people get caught up in losses and they linger on them way too long. I think the best thing you can do if you take anything out of this 5-step process is take number 5 away and start practicing that today. Start closing the book on your trades. Don't linger on losses. Mark it up, analyze it, close the book, and move on. Be better because of it. Don't be defined by that one trade. So I hope this process visualizes it and makes it easier for you to understand and hopefully implement into your own trading. If this is something that you're not doing right now, if you're not generating an idea, then measuring risk reward, then applying proper risk, then reviewing, and then moving on to the next trade, if you're not following a process that's very similar or identical to that, I really recommend you start with number 1 and you work your way through. Just start generating better ideas. How do you do that? Find a better system. How do you do that? You find someone that's already making money trading. Then work through, translate that system into good risk reward opportunities. Take the way that system is teaching you to read the chart and make good trades of it. Use the indicators, use the analysis to make good risk reward opportunities. Even if some people would look at it and say there's nothing there, you can still do it. We have people that disagree with me. They go find risk reward opportunities in other trades and I don't even see it and they make money doing it. No one's always right. No one's smarter than anybody else. It's just about who's going to find more good risk reward opportunities than the next guy. Once you do that, you just need to let the trade be, manage the trade properly, not be too heavy on it, and then analyze it. Move forward, guys. No one trade defines any of us. And keep that in mind. So I hope the process here helps you. I hope it helps you make better trading decisions going forward. If it does, if there's any one step here that was really like light bulb moment for you, or if there's any one step here that you don't agree with, drop a comment below, positive or negative. I'm always here to hear that from you guys and bounce that idea back and forth with you. And if there's any specific questions that you guys have as far as I need this video cover topic or this video topic covered, I need this, I don't understand this, just let me know. Please drop a comment, reach out to me. All my info is in the description. I'm always here to help you guys in any way that I can. All right, everybody, I appreciate you watching all the way through. If you did watch, like we always ask, drop a comment, say I watched all the way through. I always like to see who checks out the full video, and start implementing these steps into your trading today. This isn't a gambling game. This is a serious business, and these kind of blueprints, these roadmaps, this 5-step process here can change the game for you, and I hope it does. So let me know how it goes. Let me know what you think, and I'll see you guys in the next trading video.